You're joining us to hear about Talanton and the new fund that we've launched called the Momentum Fund, all about proven impact investment solutions to combat poverty. We're delighted that you can join us. Let me just kick us off in prayer, and then John and I will go through this to give you the background on what it is that we're doing through the Momentum Fund, and then have plenty of time left for your questions. There's a Q&A button at the bottom of your screen that will ask you to submit the questions, and we'll process those at the end of the presentation here. So let me ask us to turn to the Lord now. Heavenly Father, we do thank you for just the work that you're doing across East Africa, that you've given our investor community a chance to see firsthand what it is that can happen when jobs are created and people have a chance to work their way out of poverty. We thank you for the 17 companies that we have a chance to partner with already, and the more that you have in queue for us. And we thank you for the wonderful support that we have from so many investors that are part of this journey. We thank you for others that now want to continue exploring, perhaps deepening their engagement here as part of the Momentum Fund. And thank you for these things in Jesus' name. Amen. So let me just get us started with what it is that we hope to do. And one of the things that's part of the requirements here is just make sure you know that we're not offering investment advice. So we have all the normal disclaimers and risks identified here. And before I go further, I'll also say that we have a full slide deck, all things that we'll send out to you afterwards. So you're welcome to take notes, of course, but please know that we'll be sending even a more detailed deck that may help you after today's session. And again, I'll remind you that Q&A button at the bottom of your screen, as you have questions, please jot notes, send them in, because we'd love to make sure that we can have a dialogue as we go forward today. What we do, I think most of you already know because you're already existing investors in our impact fund, but we seek to invest together to hear, well done, good and faithful servant. I think you probably also understand that talenton's the Greek word for talent. So we're going directly from scripture as the motivation for what we do and how we go about doing it. We really want to hear, well done, good and faithful servant, and do it by serving the least of these. So we live in Matthew 25 as how the Talanton team describes our mission. We think the things that make us unique is that we have a proven track record now, having been in existence for 7 years and had a lot of fun and learned a lot of lessons along the journey. Thus far, we've raised actually now 35 million is the net asset value in the impact fund. So doing some phenomenal work through that fund, and a great group of companies, 17 in the current portfolio, and you'll be hearing about some of the top tier ones there today with an update, because those are the ones at the top of the queue for us to now bring equity capital to through our Momentum Fund. What we try to do is bring joy to wise investors who want to be faithful stewards of capital. And we do more than bring capital. We know that it's all about supporting the companies in what they need. That's leadership development, technical assistance, impact measurement, strategic partners, and spiritual integration. We think all of those make Talanton unique in how we do what we do, in addition to why we do it. What we're here to talk about today is the Momentum Fund. That's our newest fund that will be launching officially June 30th. We'll tell you a little bit more about that as we go along, but it is designed to bring equity capital to the companies that we've already been working with for the most part in our impact fund, so that it can accelerate the job creation impact of those companies that now are bottlenecked by their lack of equity capital. We've gotten them a great start with how we funded them through our impact fund, principally with debt capital, but we're trying to empower the talented Africans that are leading these companies and the employees and the stakeholders in those companies to have meaningful work, while our investors also achieve attractive returns. There are 5 existing Talanton Impact Fund companies that will generate more than 100 million in revenue and over 50,000 jobs by the end of next year. So those are some of the companies you're going to be hearing about in just a minute. The difference between the Momentum Fund and the Impact Fund is in part that this is a limited opportunity. We're trying to raise $20 million in high impact for these high impact companies. We've already raised 8.9 million toward our 20 million goal, and this will be equity capital to fuel the growth in these companies. We provide an 8% preferred return for LPs. That means the LPs earn the first 8% before the management team gets a percentage of the future above an 8% return. It's a 10-year fund, not that we want to take 10 years to get money back. The money could start flowing back in 4, 5, 6 years. When there are exits, money will flow back. So different than our impact fund on that dimension as well. But it's the same kind of investment sizes, 100,000 minimum for direct investments, $25,000 minimum through donor advised funds. And I'm going to turn it over to John Halverson, one of the other co-founders here at Talanton, to describe some of the companies that we're excited about to be taking forward as likely investees for the Momentum Fund. John, over to you.
Thanks, Dave. Thanks, David. And it's wonderful to be with you. Thanks for taking some time to hear the Momentum story and opportunity. I'm delighted to share some of the companies that we're looking at for the Momentum Fund. These are companies we know very well indeed, because we've been working with them all for, I would say, years. And so we know the management teams, we know the challenges, we also know the significant upside and the impact. So these are carefully chosen to be Momentum Fund candidates. The first out of the chute would be Moko. Moko is often referred to as the IKEA of East Africa. This is a business that we put 2.3 million in 2021. We added another million. We often do follow-on investments in the higher performers. So we added another million in 2024. And we've seen this company grow from around 3.5 million sales when we entered in 2021 to over 10 million in sales last year. And they also cracked into the positive profitability category, positive cash flow last year. So this is a company that's really ready to hit the gas pedal more than they even have in the past. We think it could be a $40 to $50 million opportunity, if not bigger, only because the market is that big and growing fast. What's exciting with this company is that as they scale, the correlation with job creation and job enhancement and supply chain benefits is nearly 1-for-1. They work with over 250 local suppliers, providing them with a market and good credit worthy business. And they also have hundreds of employees. So this is a business that we see as one that fits the mandate of all three of our bottom lines. They have a COO named Eileen. She's wonderful. She's a strong Christian. She'll be at our Glen Area event, by the way, this coming fall. So you'll get to hear from her directly. She's very dynamic. And yeah, anyways, we see this as a business that is worthy of the equity investment to take them to the next level for the Momentum Fund. Let's go to the next slide. Yeah, here's just a sketch of 4 additional companies that are strong candidates for the Momentum Fund. Many of you have heard of Burn, with over 600 million Africans still cook regularly with cook stoves. It's a very cultural and important part of how people eat their meals. And because of that, there is a lot of forests that are torn down, and the old cook stoves that are commonly used are unhealthy. They burn very unclean. This Burn has mastered a cook stove that is 70% more efficient, burns far less wood. So the carbon credit generation is a big part of the business model, as is improved health for all the recipients. This is a business that is 35 million in sales, a bit unique in our portfolio, quite big, but they're also very active and headquartered in Nairobi. And through their distributors, well over 2,000 distributors that are directly employed, and over 1,900 direct employees in Nairobi, over 50% women. So we're super excited about the continuing upside potential and impact of this business on jobs and on the environment. Kentegra, business that many of you know well. This is a business that literally is center of the bullseye for a missional fit, with a faith-driven founders, CEO, management team, highly integrated with faith throughout the business, including ministering to their suppliers through two values-aligned partners that minister to smallholder farmers in ways that matter to them. And direct employees over 322. I'll emphasize that they have over 60 Kenyan engineers. on staff. These are hard to come by jobs. These are good jobs. Kentegra continues to be a job generating machine. When we got in, they were at 300,000 in sales. In 2023, they went over 8 million. They had a challenging 2024. They're actually on a fast recovery in 2025, and we see them somewhere between 8 to 10 million in sales by the end of this year. They are currently in an equity capital raise that's very important, and we hope to be a strong participant in that to really help them go to the next level. ARC is a business that has a product that employs at-risk youth. It's e-bikes, very what I would call fun, hipster looking. It looks like a motorcycle, but it's actually used as a taxi service, a courier, a supply chain. Every one of those business owners ends up buying the bike over time, and they're entrepreneurs, each one of them. And what's exciting is with e-bikes, electric bikes, there's a huge benefit to the environment, and they're much safer than the petrol bikes. And they've barely begun penetrating that petrol bike market. They can undercut petrol by about 30% per mile for the drivers. So the economic incentive is really significant for those riders to transition to e-bikes and for new riders to go with e-bikes. So ARC has got the potential to not only grow significantly in Nairobi, but across Kenya and East Africa. They have super strong partners like Uber and very experienced partners like Green Wheels. So we see this as a business that is fits our mandate of job creation, job enhancement, and also good for the environment, and with a lot of upside. I'll finish with POA. POA is cracked the nut on creating broadband opportunities and connectivity for the low-income urban communities across Nairobi. So this is a big, broad market, and the key is getting that to them at a cost they can afford. Most of the beneficiaries of this product, the customers, are using it for some sort of a small business. And we visited one of those firsthand, and we heard directly from the entrepreneur who said, access to POA's internet service has transformed my business. It's allowed me to hire 3 or 4 more people. It's allowed me to access new markets. I do a lot of things online with accounting. You can imagine what it means to have broadband connectivity for those small entrepreneurs and families. Many kids do their education online, and just like in the States, there's all those benefits. This is a business that has the potential to be a 40-50 million dollar business, and they're just getting started. So we would love to participate in an equity round. They're getting a lot of attention now, but what they love is a values aligned investors that shares their vision for impact. And Talanton fits the bill for all of these businesses. In fact, ARC actually left open some funding for us specifically because they want Talanton in the mix because they know our hearts and what we do on post-investment support. Next slide. Yeah, this is the president of the World Bank, just a powerful quote about why jobs. And it really is actually speaking to a lot of theological truths that we are all wired to work, and people get dignity and meaning and pride, provide for themselves and their families through work. And the quote is, creating jobs is the surest way to combat poverty and grow prosperity. A job is the most meaningful yardstick of success for any individual. With a job comes dignity, pride, and the ability to provide for yourself and your family. Slide. Yeah, so the missing middle is something that's often discussed in development circles. We see it as an investment opportunity. There's large enterprises in the developing world, places like Africa, and they're a little safer. These are much, much bigger enterprises than even the Momentum Fund looks at. And they have opportunities that other smaller firms don't have to find strategic partners for investments. Likewise, micro enterprise, multi-billion dollar industry, doing a lot of good work, just helping people get out of a little bit of poverty. But the part that's really going to create most of the jobs, 70% of the new jobs in places like Africa are the small and mid-sized enterprises, and they're the least accessed for funding. So that's where we go. We attempt to fill that gap with good, responsible, affordable investments, but we go beyond the money and do a lot of things with post-investment support that really help these businesses scale. Next slide. Yeah, and I'll finish on this one, David, and hand it back to you. I love the little diagram on the right. It just shows literally the size of Africa, 3 or 4 continents embedded within the size of Africa. But it's far beyond just the geographic size. It's also similar in scope with resources like agriculture, minerals, mining, oil and gas, most of all talent. And as the world goes to a population of 2 billion by 2040 or so, the world is going to need all that Africa has to offer. And most importantly, Africa is going to need about 450 million new jobs to meet the demand of the growing size of the population. We hope to play a significant role in creating those jobs with the help of our investors in the types of businesses I mentioned earlier. So, David, back over to you.
Don, thanks so much. I'm going to turn now and talk a little bit about the impact of what investors see when they invest in Talanton. But again, a quick reminder that the Q&A button at the bottom of your screen, if anything we've said thus far prompts a question, please jot a note and let us know what we might answer. But we're delighted to say that one of the key bottom lines that we seek is job impact. We're trying to make sure that what Talenton does impacts helping people work their way out of poverty. And good jobs, as you heard from the president of the World Bank, is a key to that. And you'll see that across the 17 companies in our portfolio, at the end of 2024, we had over 109,000 jobs that's created or supported across those 17 companies. You'll see that it's just been growing very nicely, full-time, part-time, and farmers and miners and people like those motorcycle drivers that all end up with jobs and incomes because of the kind of companies that Talenton has invested in. And it's just super encouraging to see the number and see the slope. It's headed toward what we'd like to see in the years to come. Now, on the finance front, because Talenton's impact fund is an evergreen fund, the returns vary each quarter. There's a new group of people that could start joining the fund there, but so we show different results over two different starting points. The top graph here is the starting point that began at the beginning of 2021, and that group of investors has seen a 14.2% increase in their funds, and people that joined us after COVID was more in the rearview mirror. That group that entered at the beginning of 2022 has seen 14.3%. They didn't have to suffer a little bit of that challenging time back there in 2021, but we're delighted to just see the pace and continued growth of what we're delivering to our investors as days go by. We do in the impact fund split between debt and equity. It's mostly a debt fund, and the equity is going to take some time to play out. But guess what? That equity are part of the companies that now we can bring extra equity to through our momentum fund. So we just wanted to make sure that we laid out the differences and similarities between the two funds. So the impact fund on the left, the momentum fund on the right. The impact fund really is that missing middle catalytic capital for those businesses, little earlier stage, 500,000 to 5 million in revenue. And the momentum fund seeking to bring equity capital to scale those businesses. Many of the businesses that will be funded by momentum fund will be above 5 million in revenue by the time we're bringing that equity capital to them, and it's taking them to the next higher level of overall impact. The structure of the impact fund is debt and royalty-based investments for the most part, with a 4-year redemption window that investors can exit if they choose to anytime after 4 years. Very few have chosen to do so. We have 150 families that have invested, many of them multiple times. I think we have 50 families that have invested 2, 3, 4, and in one case 6 times into the impact fund. The Momentum Fund is an equity fund. It is designed to invest in companies that we can exit within the next 10 years. Again, could be any time from 4, 5, or 6 years, but we have a little bit longer time to see that equity do its job of helping those companies grow before we actually participate in an exit for those companies. Both of the funds are focused on jobs, explicitly job creation as the lead impact metric, followed by financial and spiritual returns. And the focus on the Momentum Fund is the same, but accelerated pace of growth and societal impact, especially for that Momentum Fund. And the unique value of each fund, it's bridging capital in the debt space on the left fund, and it's bridging capital, unique value that's fueling proven businesses for the most part already in our portfolio. From the impact fund will be the core companies that we invest in the Momentum Fund, not exclusively companies that have first been in the impact fund, but a large majority are likely to be directly from the impact fund. So we like to say two funds, but one big, wholly audacious goal. So our BHAG's a little different than what I think Jim Collins originally called them, but we like it being a wholly audacious goal. You'll see that we've had nice growth over time in the committed capital in the impact fund. By the end of 2029, we're hoping that'll be a $70 million fund. This momentum fund, we're seeking to raise 20 million in capital. And combined, we believe that we'll be able to reach 40 plus companies. And the important number on this slide is the bottom right-hand number. 1 million jobs is what we believe the Lord's asking us to strive to see if we can't create and support 1 million jobs across a portfolio that could have 40 different companies that will have been part of our journey here before the end of the decade. So again, we're all about investing together to hear well done, good and faithful servant. We'll send you these slides. And if you've not seen the clip from Ben Carlson there on the left, our original very first investment was Long Miles Coffee. And Ben, in the business that he founded in Burundi to serve the poorest people in the poorest country on the planet with great hope of the gospel and good income and jobs, he also ran a vacation Bible school just a few months back, and his vacation Bible school had 9,300 children in it. And the community there that they started serving 7 or so years ago has seen a 95% decrease in early pregnancies. So when people ask us what difference does faith-driven make in being a faith-driven investment, those are the kinds of impact results that get us super excited. So that's the summary of the Momentum Fund. We wanted to make sure we left time for your questions. So I'm going to stop sharing screen and ask Michelle to join us here and serve up whatever questions you may have. Michelle.
Thanks, David. Thank you so much. John, thanks as well for the good presentation. So one question that has come in is why is equity capital advantageous to our companies compared to loans through the impact fund?
Don, you're on mute.
Yeah, I can answer that one, David. Yeah. So the impact fund is mainly the primary instrument is debt, indeed. For all of the debt investments in the 17 companies, we always explore what's the best return profile for the overall investment. Sometimes that's minority equity. Sometimes that's warrants or options on future equity. Sometimes it's a revenue share in exchange for a lower interest rate. And those are all important tools and instruments we use in that first fund. But the nice thing about the debt is that it keeps us very close to the businesses. Each quarter, we know exactly which ones are paying easily, which ones are struggling, and we can zone in on those and work with the ones that are struggling to make the repayments on time as promised. So it's been a great way of keeping liquidity coming back to the fund. It builds in an automatic exit. The Momentum Fund is for those companies that are ready for significant growth and are often doing an equity round or opening up equity opportunities for funds like Talanton. And what we don't want to miss those opportunities. We looked across our board, our investment committee. Some of our investors said, "We love these companies. We love these companies. They need this equity for significant growth, and we want to participate and have that be part of the mission of Talanton." So we have this morning I was with some potential investors and they gave me an analogy I'll use. They said your impact fund is like taking a sapling and helping it become a mid-sized tree, but the momentum fund is helping it go from a mid-sized tree to a really big, healthy, mature tree that's bearing loads and loads of fruit. And I said, I'm going to steal that analogy. So that's the difference, and that's why they go hand in hand.
Thank you for that, John. Wow, what a apt description there.
Yeah.
Another good question that has come in is, could you clarify the difference between the capital call structure for the Momentum Fund versus the Impact Fund?
Yeah, I'll be happy to take that one. The impact fund that most of you are already familiar with is one that has an evergreen structure, which means that you can add capital every quarter. Generally, our investors have added the full amount of capital at the point at which they invest. In some instances, we've taken a commitment and called it over time, but that's been rare. In the momentum fund, it will be true that all capital will fall into the callable category. So you will make a commitment. Let me just use $100,000 as the minimum investment commitment for the momentum fund. As we come across opportunities to make investments, Talanton will then call that capital. So we may call 20 or 25% first time out of the gate. That would give us enough capital to invest in one or possibly two companies. And we would continue to go search and do the due diligence on the companies that John just shared with you and others to make sure that they're ready for an equity investment at this time, that we like their exit parameters, everything that it would take for that to be a good investment opportunity in the momentum fund, and then we will call additional capital. So we have up to 3 years to be able to call the full funds, and then we have again up to 10 years to get the exit. So that's the way the callable capital piece works with the momentum fund.
Thank you for that, David. Another good question is, apart from the existing portfolio companies that John has described, how else will we identify and evaluate investment opportunities in Africa?
John, you want to take that one?
Sure. Yeah. No, it's a really good question. We've been blessed with an abundance of companies that we've been introduced to by a variety of sources that we have on the ground, both international partners and a lot of local partners. And now we have 5 Kenyans on our staff. So we're continually, I think we've been introduced to 3 or 4 new companies even in the last 10 days. We're quick to analyze those. Many of them aren't a fit, you know that right away, but many are very intriguing. The pipeline question is important. We have a disciplined due diligence process where we look at each one. We run it through something called an initial screen. It touches on all the most important things we want to see in investment, from an impact, values alignment, financial, business plan, especially the key leaders. What are their values and what are their capabilities? And through that initial screen, we vet and move only a select number of companies into deep due diligence. So we have, I think, 3 or 4 in process right now, several for the impact fund and 3 or 4 for the momentum fund. So our investment teams are very busy, and we're also looking at 1 or 2 additional companies for momentum fund that may not have fit the impact fund, but may fit the momentum fund. And we'd like to be able to take a hard look at those companies so long as they fit our missional mandate for what we're trying to do overall at Talanton. I hope that answers your question.
I think you did a great job there, John. A good question also around impact. How will we define and measure impact for the Momentum Fund? And how are we then going to balance financial objectives versus impact objectives as well for the fund?
Let me just start this, but I'm going to hand it back over to you. We actually think that the most important thing we do is to generate the kind of jobs that we talked about that with 109,000, that by creating jobs, it's creating a huge difference in people's lives and providing hope. However, we can't generate those jobs and that kind of impact if we don't deliver strong financial returns. So the strong financial returns are the mother's milk that gets people attracted to joining Talent in both the Impact Fund and the Momentum Fund. So we need to deliver strong financial returns, not because we don't, not because we're trying to deliver great financial returns per se, but because that's the means to the ends. They go hand in hand with our ability to deliver impact. And we want to make sure that we're looking at jobs first and foremost. But John's done a bunch of other work in the impact metrics. So John, why don't you share a little bit more about overall the impact metrics that we'll want in both funds, quite frankly.
Yeah, we have a balance of metrics that go across all of our 3 bottom lines, and David highlighted a few. Post-investment support and post-investment ministry is a critical part of our fund strategy and how we spend our time and energy. We know that care and concern for the CEOs, not just for business performance, but their marriages, their families, their management teams, goes hand in hand with ministry and business performance. So we partner with Ardent Mentoring. We heavily promote that as an opportunity. We never mandate that. We have, I think, 6 or 7 of those going now. And C12 is launching in East Africa. We're very involved in helping launched that by introducing our portfolio CEOs to the opportunity and other CEOs in our network. Super excited to see another strategic partner like that getting underway. But we ourselves also are on boards. We serve on advisory committees. Some of our investors serve on boards. People ask, is this really worth all your time and energy? And the short answer is absolutely yes. It's part of what we do for impact, but it's also really important for financial performance and long term goal of creating really values driven leaders that when we exit, we can leave behind a whole cast of those leaders. And we know that far into the future, those leaders will have even greater impact. We love Kentegra because they are the prime example of a business that has faith aligned partners, even at the smallholder farmer level. And we love sharing their stories, even with our other companies in our portfolio. We're starting to see those synergies across the portfolio of learning from one another. And that also just, I would say, makes the impact exponential in terms of where it's headed.
Thanks for that, John. All right, a good question about the team. While the Momentum Fund is a new fund, what relevant past and or current performance from the team can you share with us about updates on the team and how they're going to be managing this new fund?
You're catching. That's a great question right now because we've just added two new Kenyan team members within the last 6 to 8 weeks. It's continuing to strengthen what was already a strong core and adding to it. The key places that we're adding team members now are it's been the investment support functions, it's the finance functions, it's the ability to support the impact metrics. The team members that we've added just deepen our bench and give us a stronger ability to support the companies after they've been part of the portfolio. So the overall monitoring function and impact tracking functions are critical. And then just managing, stewarding the capital, the parable of the talents challenges us to be a wise steward. And so we're trying to make sure that we can work very closely with the companies that we've invested, in addition to serving on their boards, working with their finance team, their CFOs, to try and make sure that they are stewarding the capital we've invested wisely, and also that we're helping with more team members on the ground to help these companies with their overall strategy and development of the right plans and processes to tackle their growth. They're very rapidly growing companies and they need lots of support. John, anything you'd like to add there?
I think you covered it well, David. I'll leave it at that.
You guys are doing a great job with these questions. Okay, so as presuming that the companies are going to need to go through some kind of revision to their governance documents in order to sell their shares to the Momentum Fund, will Talanton guide them through that legal process?
I'm not sure that most of them will need to make a difference in their structures. The Momentum Fund, because these companies are larger, we are part of capital raises. So we're not the only external external investor here. And we frequently are joining a round of capital that is needed. And it's hard to raise, but we're part of that catalytic capital that can help foster it and get it started. But we don't want to be the lead investor in the Momentum Fund for any of the companies that are already in the Impact Fund. We think it's best to let someone else lead the pricing and evaluation work, and then we get to agree or not whether we want to invest. We may steer it a bit one way or the other, but we won't be the lead in setting the terms for new investments unless it's a new company to us. If it's a new company that hasn't been part of the Impact Fund, then we have the opportunity to potentially be the lead investor for those, and we'll just have to see how the Lord directs our steps there.
Thank you for that, David. All right, I think we have just about time for one more here. It's about liquidity. What probable liquidity events do you see in the 10 years of the fund life, and what kind of exit options will exist for investments that will be held at the end of the life of the fund?
John, I'll let you tackle that one.
Yeah, a really critical part of any investment committee approval for the Momentum Fund in particular is exploring exit options even before we make an investment. Like, what are the various ways, with a preference, obviously, for values aligned equity exit options? And what's interesting is that Africa is changing rapidly, even in the last 5 years. there is a more and more companies, large multinational companies, that even the top 200 companies all really have to have an Africa strategy. They can't ignore a continent that's going to 2 billion and has most of the world's leftover natural resources in a whole bunch of categories. And these are rapid high growth markets by and large. They're often somewhere between 5 and 10% GDP growth a year. So big companies are always looking at opportunities. They prefer companies at 20, 30 million in sales, not the 4 or 5 million. We're the ones who step in that missing middle and help these companies get, say, from 5 to 10 million in sales to 20 or 30 million in sales or more. And then there's a myriad of players that are interested in that size. Large private equity, they really sometimes their minimum investment is 10 or 20 million. They don't want to mess around at smaller than that. So when companies climb into that category, they generate exit opportunities. One of our businesses is explicitly looking at an IPO in 3-4 years, and they're already going through a due diligence checklist to set up for that. That would likely be in London or Canada. And we have other businesses that we'd love to see do an ESOP buyout. David's passionate about that, and it's more and more common, where it would be a great scenario to see an exit for Talanton go to ownership, local ownership. And we're going to actually try and encourage that. There's a lot of options, and it's really a great question. But we see that as over the course of 10 years, certainly, as something that is going to be critical for a Momentum Fund, but a lot of options to make it happen.
I'll leave it at that. And thank you both for taking the time to take us through those great responses and comments. And I'll hand it back to you, David.
Yeah, and I'll hand it back to those of you that were able to join us today. We thank you for your past involvement with Talanton, your critical catalytic investors that have been part of that group that's allowed us to impact 109,000 jobs already. And remember, those are 109,000 families too. So hundreds of thousands of people that benefit from your participation in Talanton already. And we're hoping that if you're able and willing, you'll join us to now join the Momentum Fund, help us take these companies and others to new heights of impact and financial return. So we look forward to talking to you soon. And please reach out to John, to Michelle, to me, so that we can continue this conversation and answer any other questions that you may have. God bless now.
Thanks, everyone.
Thank you.